Okay, let me just see if we're live here really quick. I'm pretty sure we are, but let me make sure. Okay, cool. So we are live here for today. It says for last 20 seconds. Cool. So really quick, what I'm going to go over before the market open is going to be Friday's positions that we took. Kind of some of the ideology behind it all. And, we'll also probably be here for the market open. So I do have the chat open as well. But really quick, we'll dive right into Friday's position because Friday, I think, is the only day I didn't do a review. But as you can see, last week, I'm going to obviously be removing some of these price levels and some of these, key areas, whatever. It's kind of looks like a Christmas tree right now, but they'll be a lot more clear as we start. But going into last week, we came off of the 25,000 level all the way up to almost 27,000, very close, 26,600s, 900s. And so going into Friday's price, when you start to look at the, let's go over 15.5 here. When you start to look at the intraday price that we were looking for, so move this over here, move this back, okay. So you're looking at the intraday price. The first area that I thought was pretty good, and we kind of looked at going into New York, was the buy positions here in the 26,650s up into the 26,692s, almost 700 level. And the reason being is because before the equities open, what they did was they started to sell off and create what's called like a FOMO move into the open, right? So you had, this was 8 a.m., this candle here, right? So this was your 8 a.m. candle. And then you have 8:05 to 8:10, then 8:10 to 8:15. So this is 15 minutes before equities open. And then they start to roll over and sell off and really create that FOMO and make people think like, well, damn, maybe they're going to go for the New York lows, right? And possibly take that low. That was something I was anticipating was possibility until they really started to, draw in more shorts by selling off going into the equities open. Okay, so move this over here as well so I can see it. Okay, so that way I can see if there's anything in the chat. Okay, cool. So when you see how they rolled over, like I said, coming into the 15 minutes before 8:30, then the very first candle we get, 8:30 to 8:35, we get the spike down. Now, I wasn't really seeing anything at first. The only thing that I was really wanting to really look at was, let me refresh this, I forgot, it was on a different window. The only thing that I was really looking at, sorry, I'm kind of messed up on my clicking there. The only thing that I was looking at on 15.5 down to 1 minute was going to be the way it started to sell off, essentially in the very beginning, okay? And so I knew that they were kind of trapping people just because of how they were creating that move in the location of the New York Open. And so they started to sell that move off, and I was kind of looking at like, okay, maybe if you go back to like a 15.5 in this situation here, it was looking like, okay, maybe we are after this 8:25 to 8:30 candle with that lower low close on the body, that we could go lower, right, and start to reach for maybe 26,500 whole level, or at least back to where previous day high was 26,560. So it just really depends on what they wanted to do, but also you can anticipate when shorts are all locked in off this 800 level. So just take an example, if you took a position here, right, and you're like how we would look for a position in a situation like this, and price goes and breaks below this candle's low, right? Essentially, you're sitting there thinking like, okay, that's a break of structure, and that's a really good, R multiple based on what edge you would have had, almost on anywhere on that move. Okay, so that was looking pretty good going into the open. But the first move that we actually ended up seeing, because I do want to do this before the gap probably happens, here from the news coming out from Iran from over the weekend. So we ended up seeing like that very first candle print bearish, right? And then immediately that next candle showed us that sign that we wanted to see, right? 8:35 going into 8:40. And a lot of times something you can learn from me, something I've obviously learned as well from short covering positions, is they're not going to always make it one run up on that 5-minute candle, right? And that 1 minute candle, they're usually going to set a 5-minute demand times a point of interest in this situation, which was really good, and then to continue up and go higher. So the move that we ended up seeing, that we ended up trying, was there was one that I thought was really good on the 1 minute, to be honest. which I just wasn't there and ready for because of how the 5 minute looked. So it went down after we got the 835 to 840 close stronger. Then we started looking for a little bit of price going above this 26,690 level. So it almost looked like this. Like I said, I'm trying to hurry the entry part up so that we don't see the gap, because the gap might distort the price. And so we were seeing this, and like I wanted to frame up something buying below New York opens and bullish conditions to attack high of day. But the way that the 1 minute, or the way the 5 minute wick was, the 1 minute was giving you a massive demand. So you had to really be patient for your area to deliver inside this candle, and you had to really understand, like, okay, think from risk to entry. So this would have been my risk, right? And then thinking up, like if I kind of just draw here on the left side, but if you're looking on the right side, up into that right side area of that demand candle. And so I wasn't looking at it until I got the close above here. And then I wanted to see everything on the right side of this candle here. I wanted to see a mitigation play set up. And then I wanted to also see that at the timing that we always talk about, okay? And so it was tricky because you had to really understand what you're looking at on a 15 and 5, right? And understand that you're filling an imbalance at the 26,650 level, but at the same time, you've got 5 minute demand times point of interest, but you have to know how to think from that risk to entry in that situation, which they made it very difficult. And that's what made our actual entry that I'm about to go over here really quickly a little bit more difficult to get through the supply and get through the high of day, but then ended up continuing that way after hitting us break even. Okay, so looking at the position here, I personally on a 5 minute, I remember I waited for the candle to close here 850 to 855, and then I started to play on the right side of that candle inside like the 26,700 level, and I wanted to see that price go up, which we ended up seeing the 1 to 3 to deliver. So that's kind of like what I talked about. If you guys are going to be trading with us live next week, or I will be on YouTube, like I said, a little bit this week. You just got to understand that those 1 to 3 setups are really, really good, and those 1 to 5 setups are, in this type of market environment, are pretty much not just like a given, right? They're going to play out, but you're also going to take some heat and some things inside the situation or the trade that you're taking to be able to get those higher R multiples in these environments. Okay, so 52? Okay, cool. So first 15 minutes of the hour, last 15 minutes of the hour is when we like to execute our orders. So if you look at the price, 8:57 was the entry time on this one. I believe it was like 7:06 is where I entered. I was trying to frame up that 5 minute candle as best as I could, and then we were wanting to play up into those 26,780s at least, and possibly up into at least 50% of that candle, so 26,792s or above those highs, which, like I said, I ended up doing. And so when the 1 to 3 delivered, we ended up taking a partial, right, and going break even on the remainder of our move. And then price came down at 920 here, and spikes. And as you can see, it spikes the what? The 1 minute FEG, so the 1 minute imbalance, inefficiency of price on the way up, and filling that 5 minute FEG at the same time, just basically getting those trailed risk players that want to see what we wanted to see, right? And then price then continues to rally up. Now, the second area that we ended up looking for was 927. Now, this was outside the time window, and it was a little bit more of an aggressive trade, but was to aggressively try to push this up. And for some reason in this area, it was just showing so much manipulation. In this area, ended up pressing up. I had closed my partial, my short, went break even. I thought price was going to short off. I ended up taking a scratch actually right here, trying to short this area without letting that high of day deliver, which was against the bias a little bit. But that's why I was like, man, it was just retarded, because I really wanted to see that continuation of that buy position, but ended up taking that short position right there and ended up taking a scratch. So I was kind of mad because I was like, yeah, we wanted HOD and we just didn't get HOD to deliver exactly as clean as we wanted. So, but that was the one mistake I would say, is that when I seen price here is around 9:10, that macro time, excuse me, and price was coming into that 9:12, 9:13, 9:14. I was looking for possible shorts on this side because I was already out of my trade on this situation because I hit the rest of it break even. And I was looking for shorts essentially here on this 5 minute area to then attack back down to New York low, and just was wrong on that trade, and the price extended up, okay? And then we ended up taking another short, I believe, right, which was in the 9, that last 15 minutes of 9. And we ended up seeing that 5 minute close, 50 to 55, and then we ended up playing shorts inside the 26,845s, right? And that price actually did deliver another 1.5, which actually did pretty well because this one delivered 1.5, but then ended up going break even on the remainder. And then this one ended up delivering 1.5, and I had only half volume on the trade when I took it, and I let the last was just one contract left across the account. So I let one contract stay open, and they ended up eventually coming up and hitting my break even on that as well. So and forcefully through that area. So that was a pretty good, force through that we ended up anticipating seeing the double tops. Okay, so I will say Friday was a little bit annoying. Thursday was the best day of the week for me last week. I mean, that was a pretty clean situation. What we looked for Thursday, capitulation, right? And capitulation at the open, price rolls over. All the signs and criteria that we want to see to play back to a high of day and back to an internal London liquidity type of situation. So that was perfect. I think that was a classic, bullish, model day that we look for, the signature move that we look for. Now, Friday's move was very similar, but very choppy in the fact of how they delivered the 5-minute wicks here, especially here at 8:45 going into 8:50, and then how they continued to draw on that liquidity. And instead of, going sell side move here, they just launched this one 5-minute candle, which made, honestly, to me, after looking at the tape, it made complete sense because of how they filled the area of this 5-minute gap. So the area that I'm basically looking at here, because we only have like 4 minutes before the opening, the area was like somewhere in here. I think it's on a smaller time frame. Let me look at it again. So this 1 minute little area right here is the area that I'm talking about. So it's like just from here to here, just like that. And when they fill that area and the price is continuously going bullish, all they're essentially doing, like where the body's closed in the 5-minute here, essentially all they're doing is just holding the price bullish to continue higher. And so instead of looking for, possible shorts inside that 5-minute wick up to that area in the 760s, just continue to, this spinner candle is the candle that really gave me the indecision. Like it's an indecision spinner candle. So the 25 to 30 candle in the 5-minute. And so that candle alone, after filling that imbalance was kind of like the one, and they started making that bullish price action here, 28 to 29, then 29 to 30. And then that candle right there is the one that like shifts 30 to 31. And you just know from that point, it's probably going to reach for HOD. So I thought it was a pretty good setup, regardless. It's just there could have been a little bit more locking in, I would say, when price came into the 5-minute demand candle and this understanding how it was formed. But like I said, I've also played a lot of positions where if you play that type of position, they'll go deliver the New York low first and deliver into demand or fill the little, FEG here at 26,600 below it. And then, right after they draw on that buy side liquidity, then they'll go and take and run for the highs. So pretty good setup. That was pretty much what we ended up seeing for Friday. Like I said, we'll watch how this opening gap, if it's going to be crazy. I think it's going to go down to the 400s or more, just based on the news, right? The previous day low, that Asian low. So we'll see what they do here in about 2 minutes. But yeah, everything is really, really bullish. When I brought up the higher time frames, we looked at it from this perspective here, which I'll go over really quick. Right, and so I'm going to move some of these lines, but we're very bullish. We're pushing into that 26,883, which is all-time highs, and obviously it kind of looks, when you look at it now psychologically, like that 27,000 level looks very doable. All right, so we'll see what they decide to do, but the manipulation is in, right? And so we'll also see what they decide to do when it comes to the war in Iran. Okay, so I'm going to take some of these off and we'll see how they all open, and then we'll get out of here for the week. But yeah, definitely you can go study that position from Friday. I think it was a good position. I think buys, obviously the trend was obviously bullish as well. It was just how they engineered the liquidity coming into the equities open. Okay, so about 40 seconds before this opens, let's see what they do here. And now I went over the trade review for today, the titles. Yeah, and we talked a lot about oil too. I don't have oil pulled up on this window, but we talked a lot about oil and where it was. So let's see how it opens up as well. Gap down. Wow. Okay, cool. Let's see here. So the gap down was, where did I say? 600? I said we were going to gap down to 400, right? Below Asian lows from last week. Let's go. Let's see. I think oil saw some time to open. So we talked about 400s, right? So Friday's daily open. If you guys are watching the 1 hour and 15 here. And so this is typical where they're at. I mean, the prices that they're doing this at. Let me look at all three of the assets. All three gapped. So we need a 1 hour window of those really quickly. So as you can see here, we have YM on the left, ES in the middle, and NQ on the right. And that's a crazy gap for ES. And all this is coming down to, right, so 60-point gap on ES, 350 almost handle gap on YM, and then, let's see here, let's just say 250 on NQ, right? So pretty crazy gaps, right? But with that being said, I mean, that's going to come with the stuff going on in Iran as things start to heat up and continue to be crazy and stuff with Trump saying online, right? The prices of oil is going to shoot up, which should push us down. Which we talked about this. We talked about short covering on Friday of oil, right? Of individuals playing oil. So regardless of what people say, they use news as an excuse to push price to hurt traders, right? People think that this stuff is just randomly happening. It's not. This is literally order flow in the markets, right? So I'm gonna take a picture of this and drop this in the Discord. It's just like with them telling people that they just went to space recently. People really believe that stuff. It's crazy. It's crazy. Live trading channel. Okay. So cool. So yeah, I mean, to me, this is regardless of the news that's out right now, right? Regardless of the news, when you look at the daily, right? When you look at the 4 hour exactly here, so the 4 hour and the 1 hour here, you can see we talked about this level 82 exactly being respected inside of demand, shorts covering their positions, and from there we would see a push down on NQ. Now, the only way for them to hurt traders, right, is for them to come out with news on the weekend when traders can't trade. It only makes sense, right? Because now every trader in the world, right, is trying to, play this position here on NQ, right, and on the, on tech, right? And so they probably all just shorted this position. Right, and price is already back up. So let's move this red line. This is just indicating the end of the day the other day. All right, and this candle is terrible, but people are definitely playing this right now and getting bodied. All right, and so that's just kind of what I wanted to go over here really quickly, was go over that Friday position before the price possibly distorted. But it was a bullish continuation. As you can see, what's really important here as well is they ran the New York low liquidity exactly. Right, so all the buyers that were sitting in those 26,620s, they ran the price right back down to those lows. Isn't that crazy? Let's take a picture of that for the group too, because that's very important to understand the order flow and what's going on. We're gonna kill it this week. Where look where they. Exactly. So we'll see where we're at for in the morning. We'll be trading live. I do want to see if they're going to get below 400 level, which would be getting below that previous day Asian liquidity low, just because it was consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 9 hours, right? It's almost 2 4-hour candles. It was just consolidation. So the opening candle would have been here, and then this would have been what, 9 p.m. So because 2300 is 11, so 10, 9, yeah. So I mean that's 2 4-hour candles that set in consolidation. So I'm not gonna sit here and guess, but like I said, you can go over those positions from Friday. I think they could have been better, right? They were very hard and to take, and sometimes you don't even want to look to take trades like that. They're hard to take. It should be simply pretty easy and pretty bang bang type of play, right? Like going back over Thursdays, right? Capitulation, like I said, at the New York, right at the open, which is perfect, and then seeing those individuals cover and just being able to attack back to that 26,450 where the shorts liquidity would have been. So appreciate you guys watching. Like I said, we'll be on for tomorrow morning. We'll be on a little bit earlier inside the Discord because we'll be marking up new levels and getting ready for the week and getting ready to some of these other levels that I thought we potentially had a chance to see, but we didn't end up ever seeing those. So, okay, cool. So I'll see you guys tomorrow morning. Y'all have a good rest of your night, and let's see what. Also, just be on alert if you're taking overnight trades because Donald Trump could say anything tonight and could shake up everything. Okay, so talk to you guys in the morning. Have a good rest of your night.